Hey guys, it is Greg again. I want to go over Bitcoin here. And how are you going to tell the difference if Bitcoin is in a bear market or it's in a bull market? And that's a good question. So, what we're going to do is we're going to go off the data. Let's go off the data and see what the data tells us. Okay. Personally, this is what I'm going to look for to say that we are in a full-blown bear market in Bitcoin. Till we hit these levels on this leg, this is when I will say we're in a bear market. I'm going to take this retracement of that leg and go to the top of the leg right there. And if we have candle bodies below the 0.382 down here consistently, I will say at that point that Bitcoin is in a bear market. Until then, it has not retraced enough to say it's in a bear market and it's just going down deeper and deeper and deeper. It just hasn't. That's why I take it one step at a time. Okay, the next step, 21,000. So it basically has to hit that 20,000, have candle bodies below there. So basically we need candle bodies at 18,000. And at that point, then I'd be like, yeah, we're in a bear market. I would say that. But until then, until it hits those levels, I'm not going to say that. I'm going to say this. So let's go back to the history of Bitcoin on the Brave New Coin Liquid Index for Bitcoin here and take a look at some corrections and see what it did. I'm going to be conservative and go right there. This corrected to 0.382 and bounced out of it. You see that? These are shallow corrections though. Okay. Let's see this correction on this leg. Let's see what it did. Correction here up to there. That wasn't even a 0.382 on that correction of this whole impulse move right here, guys. It only corrected 2,386, but it was super bullish. And, I'm sure people called that a bear market right there. They just thought it was the end of the world. It didn't even technically, the whole grand scheme of things, it didn't even retrace that much. And here's another leg. Let's check this leg. What did Bitcoin retrace here? Let's go right there. Check that leg. Look at that, 0.382 on the nose. So that could be a fourth wave of some sort, possibly. I don't think so. But this, for this movement and they come down, that's a seriously deep retracement, actually. It went down. How much did Bitcoin go down from there? It went, 84%. That was an 84% drop, but it was only a 0.382 of this whole leg. Okay. Now, in this area, the corrections are getting more substantial, in my opinion. So if you see this leg right here, this is a second wave correction. So it came down almost 90% on that COVID crash. You see that? That was a deep correction. So it looks like times have changed for Bitcoin, in my opinion. So in the beginning, the corrections weren't as deep because Bitcoin was so bullish. And up through here, this is a massive third wave run. This right here, this move right here, this move and this move on Bitcoin is nuts. This is nuts. But that's a massive move and it didn't correct that much. Then it came up on this wave and it corrected 0.382. Okay. So now it's starting a whole new cycle right here. Okay. And it corrected on a second wave 90%. And now it's correcting on a fourth wave, in my opinion, a fourth wave. And for me to be bearish, we say, okay, to say that we're in a bear market, we have to hit that number right there, which I think we will hit that. Where is it? 0.382 right here. 21,200-ish. My thing's probably off a little bit. I think it's 21,100 is the number. Okay. And if we have candle bodies below that, like I said, if we have candle bodies below that, then I will say we're in a bear market. Now, I will say that there are some issues that are going on with the Fed. And I agree with Dave in the chat. It's in a bad situation where it has to deal with inflation. and it can't inject the capital into the markets. So that is a serious problem. But my argument to that is that they can manipulate some of that data, even though the inflation will go on. They want to have control. They want to have control over the inflation where it's not runaway inflation, but there's going to always be that little bit amount. Right now, it's a little bit too high. I mean, if they really wanted to take care of this inflation, they would be raising these interest rates up. They really, really care. They would raise the interest rates up to, like, you know, we could expect 7, 8, 9%, 10% for the interest rates to be able to do anything about inflation right now. So, you know, and then at the same time, the argument be they don't want to raise them up as much to put a huge dent in the market, like to go from 50 basis points and then raise it a whole 100 basis points or something like that would just decimate the market. So I'm just thinking that there's another agenda. My argument is, I don't know what's going on exactly. There are some issues in there, and it's a very, very good argument. I agree with that. But I think there's some other issues that are going on. And at the same time, I'm sticking with the sequence. And Bitcoin sequence, I will say this sequence can be broken. It does happen to assets. The sequence is right here. So here's your 4 coming down for your 4 and your 5. You know, if the Fed was to raise interest rates, say to 12% or 15% or something like that, this sequence could be completely broken like that. And then you'd have to change this like into an ABC like this. This would be an A, B, C move, and would be a corrective move. That could happen, guys. So just to let you know, I don't think so. It has to hit these certain numbers and have candle bodies below that for sure, for me to say, okay, it's a bear market. There's other evidence too in the going over the DXY. Okay, the DXY here. At some point, it's going up on this leg. It's going to do a correction, and it's going to pop back up on that 5th wave, and then it's going to go into something like this, guys. So it's going to do some sort of correction. It's, you know, so, you know, these targets up here of 100. I saw one guy, he came up with 167, possibly. I don't agree with that. There's no evidence of that. He's just trying to scare people. In my opinion, the 167 is way up here, guys. You know, I saw that today, and he you know, when you start coming out with like ridiculously crazy numbers like that, not to say that it couldn't happen in the future, but if we have something like that, you know, that's going to just be decimate. That's going to just decimate the markets, guys. So I don't agree with that. This is going to come. It plays these sequences out. It could be, you know, the last time that it did an ABC move, it took 4 years. Look right here. Look at this ABC move. It went from 08 to August of 2011. So if you take a look at the DXY right here, you see how the DXY shot up from March of 08. So the recession, it came down here. Here's the DXY, came up, and here's the Great Recession starting right in here. Whizzed back down and went back up, and then it started coming back down. And then in this area, you know, there were still kind of issues, but it was pretty much getting sussed out and taken care of. So in my opinion, you know, we're going to have the issue that we have going on right now, and the DXY is going to go up, you know, make a correction and go up some more. And then we're going to have probably something like this. And then, you know, probably some relief in the markets, in my opinion. Maybe not. Maybe it's just going to come down and shoot back up like this. It could do an expanded flat and then whiz back down or something like that. So we just don't know yet. That's just my opinion on whether the market is bearish or bullish. Like I said, I showed you my numbers. Candle bodies below 21,100 consistently on Bitcoin, and then I'll say we're in a bear market. Thanks for watching. Peace.